If you're in the market to buy your very first or next property, you've probably heard of the FHA loan and the benefits that come with it. Low down payment requirements, which is going to be 3.5% down. You also could have a lower than average credit score and also a higher than average debt to income ratio, all the way up to 57% DTI. Well, in this video, I'm going to give you a few different reasons why you should stay away from FHA loans, because there are better options for you if you're looking to buy a home and occupy it as your primary residence. Now, really quickly, let's go over what FHA loans are and some of the qualifying factors in order to obtain an FHA loan. Now, FHA home loans are going to be residential loans for individuals who are intending to occupy a home as their primary residence. Now, FHA loans are going to be government backed and insured, meaning that if you default on your mortgage, then the government is going to write a check to the lending institution who loan you the money through the FHA program. This program is going to be very advantageous to lenders and institutions who loan you the money to buy real estate, because again, it's government backed and they get to collect extra premiums from you on a monthly basis. In order to qualify for an FHA loan, you must meet their income requirements, W-2s for the past 2 years, ascending income for the past 2 years, a max debt to income ratio of 57% on the back end, and a minimum down payment of 3.5% that must be seasoned in your account or a family member's account for the past 2 to 3 months. You must occupy the residence as your primary residence, and you must move into the property within 60 days of purchase. And in order to close on the property, you must have an FHA approved inspector as well as an appraisal in order to value the property appropriately and make sure that this property is in livable condition. So if you as a borrower meet all of these minimum requirements, why wouldn't it be a good idea to get an FHA loan? Let's talk about that in this video, starting with number 1, PMI for the life of the loan. PMI stands for private mortgage insurance, and this is going to be an extra payment on top of your principal, interest, taxes, and insurance that goes to insuring the lender and the government in the event that you default on your mortgage. Now, private mortgage insurance is factored at 0.55% of the overall loan amount, and it tends to decrease as you start to pay down your loan over the term of that loan. On a $500,000 loan amount with a factor of 0.55%, your private mortgage insurance payment will come out to be around $230 per month. If you were to pay that extra $230 per month over the life of your loan, let's just say that you take out a 30-year fixed rate mortgage, 230 times 360 months is going to be an extra $82,800 in mortgage insurance that you're going to be paying over the life of the loan if you keep this loan for the duration of the 360 months. In this example, that's over $80,000 of your hard-earned money that's going to be going towards the lender and the government in the event that you default or someone else defaults that's taking out an FHA loan. Because with FHA loans and private mortgage insurance, they are pooled together in the event that someone who has an FHA loan defaults on their mortgage. So that simply means that if you default on your mortgage, that pool of mortgage insurance premium or mortgage insurance payments that's paid from everyone who has an FHA loan will go towards relieving the bank and government of having to put that property into foreclosure and then reselling that property in the near future. Now, the second reason as to why you shouldn't get an FHA loan is if you have good credit. FHA loans are going to be advantageous for individuals who have lower than average credit scores. Low 600s, mid 600s, and even high 600s are going to be a great fit for FHA loans, because individuals with low, mid, or even high 600s are going to have the same or slightly lower interest rate than its counterpart, which is going to be conventional home loans, which are going to be your standard home loans. However, if you have a decent credit score, 700, 740, 760, and even all the way up to 800, is it really smart for you to get an FHA loan, given that your interest rate is going to be somewhere similar to someone who has a credit score of 650? And the answer is no, because if you offer a conventional loan with a credit score of 740, then you're going to get the best possible interest rates that the market is showing in today's market. So if you're into maximizing savings when it comes to purchasing real estate, then conventional loans are going to be the better loan product in comparison to FHA loans, given that there are additional costs associated with FHA loans, which perfectly ties into reason number 3 of why you shouldn't get an FHA loan, which is going to be the higher closing costs. Not only are you going to have a mortgage insurance for the life of the loan on FHA loans, but also you're going to have something called an upfront mortgage insurance premium, which is going to be factored at 1.75% of your overall loan amount. So let's stick with the example of you having a $500,000 loan amount. $500,000 times 1.75%, that's going to equal $8,750 that you're going to have to pay at closing, because this is a required additional closing cost for all FHA Loans and all FHA borrowers. Now, you do have the option of financing this into your overall loan amount, but do keep in mind that that's going to increase your monthly payments every single month. So on a $500,000 loan, if you decide to finance the $8,750, your monthly payment would increase approximately $50 per month every single month for the next 360 months. So if you were to finance this upfront mortgage insurance premium payment of $8,750 over the life of the loan, $50 times 360 months is going to be $18,000. So go ahead and add that $18,000 to the $80,000 that you're going to be paying with your private mortgage insurance. You're paying over $90,000 to $100,000 in extra payments that goes towards insurance and interest that doesn't go into your pocket. So hopefully you could see that FHA loans are just simply going to cost you more money over the life of home ownership, but we're not done just yet. Reason number 4 as to why you shouldn't get an FHA loan is if you are purchasing an investment property. Now again, at the beginning of this video, I said that FHA loans are going to be only and solely for individuals who intend to occupy their home as their primary residence. If you are intending to buy an investment property, then unfortunately you would be disqualified for an FHA loan. But you may be thinking that I could use an FHA loan and its low down payment requirements of 3.5% to buy a property and then turn it into an investment property 3, 6, or 9 months thereafter. Well, I implore you not to do that because FHA has been known to send out inspectors to visit the property after purchase to confirm the occupancy of the home that was recently purchased. And if you are caught buying a property and committing quote unquote mortgage fraud by turning an FHA loan or FHA finance home into an investment property, you could reach up to $1 million in fine and 30 years of jail time, which is simply not worth it. So don't commit mortgage fraud and use an FHA loan to buy an investment property. These loans are only going to be used for individuals who intend to occupy a home as their primary residence. Now, I do have to add that if you use this loan program, the FHA loan program, to buy a house, and let's just say 12 months after occupancy of you living in the home, and you decide that you want to move out to a bigger home or a different location, or just simply you want to move back home and turn this into an investment property, you can do that because the minimum occupancy requirement for FHA loans is 12 months. So after you pass that 1-year threshold of occupancy, then you could use it as an investment property, but anything prior to 12 months, just simply don't do it because it's not worth it. Now, the last reason as to why you shouldn't get an FHA loan is because of the strict appraisal and inspection process and guidelines in order to purchase a property. If you're going to use an FHA loan, then the house must be in livable, sanitary condition in order to close on your loan. And if the home is not in livable, sanitary condition, then unfortunately you will be unable to move forward with the home buying process. And this will put you at jeopardy of losing your earnest money deposit, your appraisal fee that's coming out of pocket when you purchase the property or when you order the appraisal, as well as the inspection fee. So you could be out a few $1,000s because you are unaware of the FHA appraisal and inspection process. Now, some common repairs and hurdles that are found on inspection reports and appraisal reports via the FHA process are going to be chipping paint interior as well as exterior of the home, broken and cracked windows and doors, safety handrails throughout all stairs of 3 or 4 steps or more. Pest or insect problems are another setback as well too. So just make sure that you review all of these common setbacks. And if you are to use an FHA loan to purchase a property, just know that the house needs to be in livable condition. Now, because of the strict appraisal as well as inspection process, this could add another expense or cost to you as the buyer in order to bring up the home's value or in order to bring up the home's condition to a livable condition that meets the FHA standard. So yes, you can negotiate and pass on this expense to the seller because of course it's their property, but unfortunately this makes your FHA loan less attractive and could cause the seller to withdraw from the purchase contract and go find another buyer with a loan program that has less strict guidelines. All right, guys, here are just a few different reasons as to why you shouldn't use an FHA loan to buy your first or next property. However, if you have used an FHA loan to buy property and you had a good experience, or if you've used an FHA loan and you've had a bad experience with it, do us a favor and share your story in the comment section below so that we could learn from it as well too. That would be greatly appreciated. Now, if you need help finding the best lender and loan program for your real estate needs and you'd like my help and guidance in the process, do me a favor and click the below, and I'll be able to help you find the best loan program with the lowest possible interest rates and the best possible term for your first or next real estate purchase. Thank you so much for watching this video, and I will catch you on the next one. Goodbye for now.